Tesla just proved something most people still don't want to accept. Humans are no longer the safest drivers on the road. And if that's true, Tesla's value is being massively underestimated right now. Hi, this is Ken. Today, three major events happened almost at the same time, and together, they tell a much bigger story about where Tesla is heading next. By the end of this video, you'll understand why these updates are not just cool autonomy news, but why they directly impact Tesla's long-term valuation, its business model, and why 2026 could be a defining year for long-term TSLA investors. Let's start with the most important one, the coast-to-coast drive. A Tesla Model S just drove from Los Angeles to New York, 3,081 miles, harsh winter weather, snow, ice, rain, freezing temperatures, and here's the key point, there was zero human intervention, not once, no safety disengagement, no takeover, no just-in-case steering input. This wasn't a staged demo, it wasn't a short controlled route. This was real-world autonomy at scale. What makes this even more interesting is who did it. Not Tesla marketing, not a company-run event. It was led by automotive journalist Alex Roy and an independent autonomy-focused team using a production Tesla Model S running FSD version 14.2.2.3. That detail matters because credibility matters. And when you dig into the data, the results become even more uncomfortable for human drivers. According to Alex Roy himself, the car performed consistently and predictably throughout the trip. The mistakes didn't come from the software, they came from people. At one point, a human error caused the team to lose over 90 minutes. In other cases, human judgment led to unnecessary detours, adding hours and hundreds of miles to the journey. And that led to one of the most important conclusions from this entire drive. The Tesla would have arrived in New York faster if the humans weren't there. This sounds almost ironic, but it perfectly aligns with something Elon Musk has been saying for years. Once autonomy reaches maturity, human intervention becomes the error. And for the first time, we're seeing real-world data that supports that claim. This is no longer a philosophical debate, it's becoming a statistical reality. Now, here's why this matters beyond headlines. Regulators don't care about hype, they care about measurable risk reduction. A zero-intervention, coast-to-coast drive is not just impressive, it's regulatory evidence. It shows that autonomy can handle edge cases, long distances, and unpredictable conditions without human help. And that changes the conversation entirely. This brings us directly to the second major development. Tesla has now launched Robotaxi operations in Austin without a safety driver inside the vehicle. Yes, there is still remote or trailing supervision. And yes, this is being rolled out cautiously, but make no mistake, this is a critical operational milestone. For over a decade, Tesla promised unsupervised autonomy would arrive. Now, that promise is starting to materialize in the real world. And here's the part many people miss. Tesla isn't rushing this. They're blending supervised and unsupervised vehicles, slowly increasing autonomy density while minimizing risk. This is not just a technical strategy, it's a regulatory and trust-building strategy, and that's exactly why the market reacted. Tesla stock jumped over 4% on this news alone. Now, before we get carried away, we need to slow down and stay analytical, because what happens next is where long-term investors should really be paying attention, and that takes us to the global picture. So, let's zoom out and look at the global picture, because this is where Tesla's story stops being about driving and starts being about scale. At the World Economic Forum in Davos, Elon Musk made a statement that caught the attention of long-term investors. He said that approval for full self-driving in Europe could come as early as next month, with China potentially following a similar timeline. Now, this isn't a confirmation, it's an expectation, but expectations matter when they're backed by momentum. Europe is especially important here. European regulators are among the strictest in the world when it comes to vehicle safety. If FSD receives approval there, it becomes a global credibility signal. It tells other regulators, other governments, and other markets that Tesla's autonomy system isn't just advanced, it's trusted. China is a different challenge, but also a massive opportunity. Tesla already operates with partial approvals there, and progress has been steady, even if communication remains cautious. If full approval happens, Tesla instantly unlocks software revenue across two of the most regulated regions on the planet. And this brings us to the business model shift that many investors still underestimate. Tesla is no longer trying to grow purely by selling more cars. Vehicle sales are cyclical, margins compress, competition increases, but software scales differently. FSD subscriptions, Robotaxi services, and autonomy-based platforms introduce recurring high-margin revenue streams. That's not an auto company profile, that's a technology platform profile. This is also where Optimus quietly enters the conversation. The autonomy stack Tesla is building doesn't stop at cars. Perception, planning, decision-making, and real-world navigation are foundational capabilities. Once those are solved, they apply to robots, logistics, factories, and services far beyond transportation. That's why autonomy matters so much. It's not a feature, it's an operating system for the physical world. Now, let's talk risks, because ignoring them is how investors get blindsided. Regulatory delays are still possible. Political pressure can slow progress. Public perception can shift quickly after incidents. And yes, Elon Musk has missed timelines before, but here's the key distinction. The direction is no longer speculative. Only the speed is. The data, deployments, and regulatory engagement all point in the same direction. So, from a long-term investor's perspective, the question isn't whether autonomy will happen. The real question is whether you believe Tesla will be one of the companies that owns it at global scale. If they do, today's valuation looks very different in hindsight. If they don't, expectations will reset and volatility will follow. That's why 2026 matters so much. Tesla is in the middle of a transition from selling vehicles to operating autonomous networks to becoming a robotics and AI infrastructure company. Transitions are messy, they're uncomfortable, and they're easy to misunderstand, but they're also where long-term value is created. So I'll leave you with this. Tesla isn't proving that cars can drive themselves. It's proving that humans may no longer need to. And for long-term investors, that possibility changes everything. Thanks for watching. Take a long-term view, stay analytical, and I'll see you in the next one. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.